Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 142, recorded here on November 17th, 2024. This podcast is for entertainment only and is not investing advice, so do your own homework. All right, well, we'll go through the market news update and outlook, get through the weekly top Bitcoin news, and check out this week's featured post, and then we'll finish with the top boosts on Fountain. So let's jump right in. Wall Street posted its worst weekly performance since the start of September and has now notched a negative week in 3 of the last 4. Uh-oh! It was still a historic week for the gauge, which on Monday closed above 6,000 points for the first time ever. That milestone was achieved when sentiment was still in a post-election hangover. Former President Donald Trump's victory over Vice President Kamala Harris on November 5th sparked a furious rally that had propelled the S&P 500 to its best week in over a year. But the focus over the rest of the week quickly shifted back to economic data and the Federal Reserve, slightly hot consumer and producer inflation data, along with a comment from Federal Reserve Chair Jerome Powell on Thursday that suggested the central bank would not be in a hurry to lower rates weighed on markets, especially on Friday. According to the CME FedWatch tool, the probability of a 25 basis point interest rate cut in December has fallen to about 60% from 72% a day ago and nearly 65% a week ago. Still, despite this week's decline, the benchmark S&P 500 remains 1.5% higher than its closing level on election day. For the week, the S&P 500 slipped 2.1%, while the Nasdaq Composite shed 3.1%. The Dow fell 1.2%. Looking ahead, a chunk of the spotlight next week will be dominated by NVIDIA. The world's largest publicly listed company by market cap gears up for its fiscal third quarter results scheduled on Wednesday. The chipmaker has continuously delivered blowout numbers since the artificial intelligence boom, amid soaring demand for its chips that can power complex AI processes, and its quarterly reports have become market-moving events. Aside from NVIDIA, investors will also get an idea of the state of the consumer from retail giants Walmart and Target's earnings. The economic calendar is fairly light next week. Market participants will receive updates on the housing market, along with initial jobless claims, flash PMI readings on manufacturing, and the services sector will grab attention on Friday. There are also several Federal Reserve officials that will be giving speeches, and we love their speeches. And their comments will be parsed, especially after recent data and comments from Chair Jerome Powell caused a reassessment of the central bank's pace of interest rate cuts. And of course, now we're back to watching the Fed, because that's how you invest. All right, jumping into the Bitcoin news. This is from Bitcoin.com. This is the week in review. Headlines from the week. Let's see, the first one here is Bitcoin hits historic $90,000 as investors rally behind new highs. Next one is Doge Unleashed. Elon Musk takes on Trump's quest to slash regulations. Pepe surges 40% as Robinhood lists meme coin. Don't care about that. Peter Brandt spots Dogecoin Bitcoin chart similarities. Who cares? Bitcoin boom. Expert eyes $500,000 Bitcoin, declares 1 million absolutely within reach. This is from Bitwise's Matt Haugen. And that pretty much wraps up the headlines. Moving into Hodler's Digest from Cointelegraph.com for the November 10th through 16th. Here are the top stories. MicroStrategy founder and Bitcoin bull Michael Saylor has ruled out the chances of Bitcoin retracing to 60,000, a crucial price level for the majority of 2024. I don't think it's going to 60,000. It's not going to 30,000. I think it's going to go up from here, Saylor told CNBC on November 14th. Bitcoin is trading around 87,790 according to CoinMarketCap. He said Donald Trump's win very decidedly settled the future of crypto and Bitcoin in the United States, adding, I don't really see any threats on the near-term horizon. I'm planning the $100,000 party, Saylor said. I'm thinking it's probably going to be New Year's Eve at my house, so I would be surprised if we don't go through $100,000 in November or December. A prosecutor with the United States Attorney's Office for the Southern District of New York has suggested that authorities are devoting fewer resources to bringing cases involving cryptocurrency-related crimes. Speaking at the Practicing Law Institute's 56th Annual Institute on Securities Regulation on November 15th, Scott Hartman reportedly said there would not be as much crypto stuff coming out of at least the SDNY in the future. Hartman, the co-chief of the Securities and Commodities Fraud Task Force at SDNY, hinted that many of its criminal cases against high-profile executives like former FTX CEO Sam Bankman-Fried were filed in response to the crypto market downturn of 2022. We brought a lot of big cases in the wake of the crypto winter, said Hartman. There were a lot of important fraud cases to bring there, but we knew our regulatory partners are very active in this space. Bitcoin's record-breaking rise since the United States elections is expected to continue, and investment manager and fund issuer VanEck is targeting a price of $180,000 for sometime next year. It is just getting started, VanEck's head of digital assets research Matthew Siegel told CNBC's Squawk Box on November 14th. We're now in blue sky territory, no technical resistance, and we think we are likely to make repeated all-time highs over the next 2 quarters, he added. Bitcoin has risen about 30% since November 5th, leading a wider crypto rally after the pro-crypto Donald Trump was elected president. It's continued to reach new highs with its current peak set on November 13th, hitting almost $93,490 per trading view. Bitcoin's rally has slightly cooled as of November 15th, with it trading around $88,100. A 2022 class action lawsuit filed against Elon Musk and Tesla, alleging that the businessman manipulated the price of Dogecoin through media appearances and social media posts, was withdrawn by the plaintiffs on November 14, 2024. According to the legal filing, the plaintiffs have agreed to withdraw their appeal from the Second Circuit Court of Appeals and not seek any post-judgment relief from Musk and the automotive company. Lawyers for the investors also waived their right to appeal the case in any United States court, and both sides have agreed to drop motions to sanction the other side over the lawsuit. The motion to withdraw the class action lawsuit must still be approved by United States District Judge Alvin K. Hellerstein before the 2-year-old litigation officially concludes. The United States Commodities Futures Trading Commission has issued a notice clearing the way for spot Bitcoin exchange-traded fund options. Analysts are now speculating the products could be listed imminently. Ball now in OCC's court, and they are into it, so they'll probably list very soon, ETF analyst Eric Balchunas wrote in a November 15th X post. Here we go, ETF analyst James Seifert added. The CFTC's November 16th statement announced the Division of Clearing and Risks position that the CFTC does not have any more role regarding the clearing of these options. These ETF options are cleared and settled by the Options Clearing Corporation as the sole issuer of all equity options, it stated. Crypto executives are optimistic it could have a major impact on Bitcoin's price. Keith Allen, co-founder of trading resource Material Indicators, said that the return to the mid-$80,000 range might be ultimately cathartic for Bitcoin price strength. A retest of support at 86,000 would be a healthy for Bitcoin, and it will give us some insight as to whether the velocity of this Trump pump can be sustained for a soonish run at 100,000 or if momentum is going to cool off for more than 5 minutes, he told X followers. Later, Allen suggested that Bitcoin could hit its ultimate psychological target, 100,000, as soon as the Thanksgiving holiday on November 28th. To do so, however, it needed to preserve a rising short-term trend line. If support fails at the line, price will search for support in the $75,000 to $76,000 range, he warned. A little bit of FUD for the week. Larry Harmon, who was arrested in 2020 for helping criminals launder money through the Helix cryptocurrency mixer, has been sentenced to 3 years in prison. The sentence was a show of leniency due to his assistance in the Bitcoin fog mixer case, District of Columbia District Court Judge Burl Howell said. Harmon faced a sentence of up to 20 years for the charges against him. Government had recommended a sentence of 75 months on November 11th. Harmon was fined $60 million by the Treasury Department's Financial Crimes Enforcement Network in 2020. Harmon helped prosecutors in the case against Bitcoin fog operator Roman Sterlingov, who was sentenced to 12 and a half years in prison on November 8th. Harmon expressed remorse at his sentencing. He had also shut down Helix 2 years before his arrest, the judge noted while passing sentence on him. He turned himself around before he was arrested in this case, she said. Harmon was also ordered to forfeit roughly $311 million in cash and seized cryptocurrencies, real estate, and monetary assets valued at over $400 million. Major South Korean cryptocurrency exchange Upbit is reportedly suspected of massive breaches in Know Your Customer procedures amid its local license renewal. South Korea's Financial Intelligence Unit of the Financial Services Commission has identified at least 500,000 to 600,000 potential KYC violations by the Upbit exchange, local news agency Mail Business newspaper reported on November 14th. The authority reportedly spotted alleged customer verification breaches while reviewing the renewal of Upbit's business license, potentially affecting the exchange's operations. In South Korea, cryptocurrency exchanges or virtual asset service providers are obligated to establish strict KYC procedures. Ilya Lichtenstein, the hacker who stole billions worth of Bitcoin from the crypto exchange Bitfinex in 2016, was sentenced to 5 years in prison. Washington, D.C. District Court Judge Colleen Collar-Cotterly sentenced Lichtenstein in a November 14th hearing after he pleaded guilty to conspiracy to commit money laundering in August 2023. In addition to jail time, Lichtenstein was ordered to serve 3 years of supervised release. Lichtenstein was facing up to 20 years in jail, but prosecutors had recommended he serve 5 years as he had no prior criminal history, gave substantial assistance in other investigations, and managed to launder only 25,111 Bitcoin out of the 119,754 Bitcoin he stole from Bitfinex, currently worth over $10.4 billion, with the cryptocurrency priced around $87,500. And that about wraps up the Hodler's Digest. Moving on, this article is from CoinDesk. This was posted on November 15th. Bank clients just dipped their toes into Bitcoin ETFs, but Q4 could see a FOMO spike. Wealth management clients of Wall Street banks like Goldman Sachs, Bank of America, and Morgan Stanley in the third quarter continued to modestly accumulate or trade Bitcoin via spot Bitcoin exchange-traded funds. Given the huge spike in crypto prices following last week's U.S. presidential election, it's possible the action will perk up in the fourth quarter. The 13F filings mirror the tepid price action in Bitcoin in Q3, said James Van Straten, senior analyst at CoinDesk. Most institutions are slow to deploy capital and to observe trends, and didn't take the initiative to front-run a historically bullish Q4. Goldman Sachs reported holding a spot Bitcoin ETF shares worth $710 million in the quarter that ended September 30th, as clients' allocations into the ETFs nearly doubled, up from $418 million in the previous quarter. Most of the bank's shares were in BlackRock's iShares Bitcoin Trust, in which it held just shy of 13 million shares. Other top-tier banks' wealth management operations, including Morgan Stanley, Cantor Fitzgerald, Royal Bank of Canada, Bank of America, UBS, and HSBC, didn't add to or subtract much from their positions. A new entrant was Australian investment bank Macquarie Group, which purchased 132,355 shares of IBIT worth $4.8 million. Wells Fargo, which has a very minor stake in the ETFs, held most of its shares in the Grayscale Bitcoin Trust and Grayscale Bitcoin Mini Trust. The positions were reported in 13F filings, a quarterly report that institutional investors with over 100 million in assets under management are required to file to disclose their holdings of certain securities. The deadline for the third quarter was Thursday. BlackRock disclosed a stake of 2.54 million shares worth $91.6 million as of September 30th in its own fund. The 3-month period from the start of July to the end of September signaled a period of flat to downward price action for Bitcoin, with the price largely ranging from $53,000 to $66,000. This followed the flat to downward price action during much of the second quarter, so it's possible the tepid institutional interest reflected the pall that sat over the market. Things, of course, have changed in a big way in the fourth quarter amid the run-up to and following the election of crypto-friendly Donald Trump to the U.S. presidency. Bitcoin blasted out of its multi-month range, quickly taking out March's record of 73,700 and continuing this week to as high as 93,400. The recent price action, combined with a hoped-for crypto embrace by the Trump administration taking office in January, might inspire a good deal of fear of missing out in institutional players and their clients. It's at least somewhat possible the next batch of 13Fs coming after the start of 2025 could prove far more interesting than this quarter's. I expect a lot of scrambling behind the scenes to make sure institutions have, at the bare minimum, a 1% allocation due to crypto-friendly President Donald Trump and Bitcoin breaking, Van Straten said. Next article is from Crypto Potato. This was posted on November 16th. Ex-NFL player's Bitcoin choice turns $6.5 million salary into $21 million payout. In 2020, former Carolina Panthers offensive tackle Russell Okung made headlines by negotiating to have half of his $13 million NFL contract for the 2020 season paid out in Bitcoin. Today, that move has paid off, with the value of Okung's Bitcoin now estimated at $21 million thanks to the recent surge in the asset's price. While he was not paid in cryptocurrency, the Panthers converted $6.5 million of his salary through Strike, a financial service from Zap that facilitated the purchase of Bitcoin with his funds. This move made Okung one of the first high-profile professional athletes to receive a substantial portion of his income in Bitcoin. The digital asset was trading at around $27,000 at the time of his investment. With his $6.5 million, Okung acquired approximately 240 Bitcoin, a move viewed as a significant financial risk since the cryptocurrency was still in growth phase and was known for its volatile price swings. In late 2022, the cryptocurrency experienced one of its most severe downturns, dropping to around $17,000. This means the 36-year-old's investment temporarily lost significant value, decreasing to around $4.08 million. Nevertheless, Okung adopted to hold on to his stash. Following the U.S. presidential election in November 2024, Bitcoin prices surged dramatically, reaching an all-time high of over 83,000. As of this week, Bitcoin is around 88,000, raising the value of Okung's initial 240 Bitcoin to approximately $21.36 million. This increase effectively boosts the total worth of his Panthers contract to around $27.8 million, meaning Okung's decision to invest half his salary in Bitcoin has led to an additional $14.8 million in value. The former offensive tackle, who retired from professional football in 2023, recently took to social media to share his win, declaring, "Results silence all debates." Interestingly, the former player, who is currently fronting an initiative dubbed Bitball that advocates paying athletes in Bitcoin, has indicated that he will not be cashing in on his windfall anytime soon. How long will I hold Bitcoin? Okay, how long do I plan to breathe? God love it. Okung said in a November 14th post on X. Bitcoin's recent price rally came after Donald Trump's victory in the 2024 U.S. presidential election. The rally attracted major inflows into digital assets, with the OG cryptocurrency alone pulling in $1.8 billion according to CoinShares Digital Asset Fund Flow's weekly report. The rally extended beyond Bitcoin, with Ethereum gaining 157 million in inflows and notable activity among altcoins like Solana, Uniswap, XRP, and Tron. All shitcoins. Overall, the total cryptocurrency market capitalization reached a new all-time high of $3 trillion in early Asian trading on Tuesday, November 12th. This surpassed the previous record of $3.08 trillion set nearly 3 years ago in November 2021. Moving on, I guess we'll focus on adoption here. This article is from bitcoinnews.com. It was posted November 16th. Pennsylvania pushes bill to invest in Bitcoin as a state reserve. Pennsylvania has taken a bold step toward embracing Bitcoin with the introduction of the Strategic Bitcoin Reserve Act. Spearheaded by Republican Representatives Mike Cabell and Aaron Kaufer, this landmark bill proposes allowing the state to invest a portion of its funds in Bitcoin and Bitcoin-based exchange-traded products as a hedge against inflation and economic uncertainty. If approved, Pennsylvania would become the first U.S. state to establish a Bitcoin reserve, setting a precedent for others to follow. Legislators and advocates believe this move positions Pennsylvania as a leader in digital asset adoption. The bill allows Pennsylvania State Treasurer to allocate up to 10% of the general fund, rainy day fund, and state investment fund into Bitcoin and related assets. Together, these funds hold over $16 billion, meaning a substantial investment, potentially over $1.6 billion, could be directed toward Bitcoin. Representative Cabell explained the motivation behind the proposal in a memo, saying Bitcoin could shield portfolios from economic volatility. He cited financial giants like BlackRock and Fidelity, which have already integrated Bitcoin into their investment strategies. He stated, "The Pennsylvania Bitcoin Strategic Reserve Act is a visionary step toward securing our state's financial future. By integrating Bitcoin into our reserves, we're not only protecting Pennsylvania from inflation's relentless impact, but also positioning our state as a leader in financial resilience and innovation." The move is inspired by the increasing adoption of Bitcoin at state and federal levels. On the national stage, Senator Cynthia Lummis of Wyoming has introduced a similar proposal called the Bitcoin Act, which seeks to enable U.S. states and federal agencies to hold Bitcoin as part of their reserves. Advocates believe these measures could strengthen financial resilience. She stated, "I believe we can get this done with bipartisan support in the first 100 days. If we have the support of the people, it's a game changer for the solvency of our nation. Let's put America on sound financial footing and pass the Bitcoin Act." Satoshi Action Fund co-founder Dennis Porter has also emphasized the broader implications of Pennsylvania's initiative. This initiative places Pennsylvania at the forefront of states preparing for a future centered on digital assets, Porter said. He added, "Bitcoin acts as a check and balance against monetary debasement. By adopting a strategic Bitcoin reserve, Pennsylvania is not just protecting its economy from inflation, but setting a new standard for financial innovation." Despite its potential, the bill faces significant hurdles. Pennsylvania's political landscape is divided, with Democrats holding a slim majority in the legislature. While the bill has bipartisan support, it's unclear if it will gain enough traction to pass. However, advocates remain optimistic. Kaufer believes that Pennsylvania's legislative action could influence other states to adopt similar strategies. He noted that this initiative is not just about Bitcoin, it's about ensuring economic stability and preparing for the financial future. Pennsylvania is not the first government entity to consider Bitcoin as a reserve asset. El Salvador, for example, has already adopted Bitcoin as legal tender and has accumulated nearly 6,000 Bitcoin, worth approximately $520 million. The Central American nation uses Bitcoin as a reserve asset to boost its economy and hedge against financial instability. Pennsylvania's proposed approach mirrors El Salvador's strategy, but differs in its implementation. While El Salvador mandates Bitcoin use across its economy, Pennsylvania's bill merely permits investments in Bitcoin without making it a requirement. This proposal highlights a growing trend in governments and institutions viewing Bitcoin as a legitimate financial tool. Porter summarized this sentiment stating, "We're seeing interest from at least 10 other states, with some lawmakers already in the drafting process to introduce similar legislation." While the future of Pennsylvania's Bitcoin Reserve Act remains uncertain, its introduction marks a significant step in integrating digital assets into traditional financial systems. Whether the bill passes or not, it underscores the evolving conversation around Bitcoin's role in state and national economies. The next steps involve securing Senate approval and Governor Josh Shapiro's endorsement. If successful, Pennsylvania could not only strengthen its financial footing, but also serve as a model for other states exploring similar measures. Cabell concluded with a hopeful vision. This work cannot be done by one lawmaker or even a group of lawmakers. It requires advocates who understand the policy intricacies and can help foster these relationships within state legislatures and Congress. So good to see there on the adoption front. More on adoption as we get to, and this is from bitcoinnews.com. This was posted on November 13th. Bitcoin overtakes silver as the 8th largest asset globally. Bitcoin has taken the financial world by storm once again, reaching unprecedented heights and making significant strides in the rankings of the world's most valuable assets. As of recent trading, Bitcoin not only broke through to an all-time high of $89,604, but also officially surpassed silver in market capitalization, becoming the 8th largest asset globally. The achievement marks a monumental milestone for the digital asset industry and cements Bitcoin's growing reputation as a viable, valuable asset. At the recent high of $89,604, Bitcoin's market cap reached $1.78 trillion, outpacing silver's current valuation of $1.729 trillion. This has positioned Bitcoin as a more valuable asset than silver, a traditional store of wealth, for the second time this year. Experts are eyeing Saudi Aramco as Bitcoin's next target. Saudi Aramco, the Saudi oil giant, sits in 7th place on the asset rankings with a market valuation of $1.8 trillion, just within Bitcoin's reach if it manages to hit the $91,000 mark. For some financial analysts, this leap in value is only the beginning of Bitcoin's upward trajectory, with some projecting it could hit $100,000 or higher before the year's end. Bitcoin's recent performance has been nothing short of extraordinary. Just a week prior, it was trading near $68,000, but following the election of Donald Trump as U.S. president, Bitcoin surged nearly 30% in value, adding approximately $20,000 to its price within days. The market appears to be reacting positively to Trump's perceived pro-Bitcoin stance, with promises to make the United States a global leader in Bitcoin and blockchain technology. According to Anthony Pompliano, founder and CEO of Professional Capital Management, institutional investors have also played a key role in Bitcoin's rise. Pompliano stated, "Bitcoin is the king of the cryptocurrency market, and Wall Street realizes that. They want to put their money with the king." This surge in institutional demand is likely to continue, especially with the anticipated approval of more spot Bitcoin ETFs in the United States, which could introduce Bitcoin to even more traditional investors. The Kobesi letter, a prominent source of capital markets analysis, highlighted the significant Bitcoin achievement, stating, "The fact that gold is still 10 times larger than Bitcoin is incredible. Not only does this show how big gold is, but it also shows how big Bitcoin can be." On a similar note, Eric Balchunas, senior ETF analyst at Bloomberg, highlighted that BlackRock's iShares Bitcoin Trust experienced a trading volume of $4.5 billion yesterday. He also mentioned that the wider Bitcoin Industrial Complex Index, which encompasses U.S.-listed spot Bitcoin ETFs, MicroStrategy, and Coinbase, reached a record trading volume of $38 billion. With a series of record-breaking achievements, Bitcoin has gained significant momentum, and Alankar Saxena, co-founder of Mudrex, believes it is on track to surpass the 100,000 threshold by the end of the year. Saxena said, "Currently, Bitcoin has strong support at 75,600. If Bitcoin maintains the momentum, it could likely have another jump to 90,000, making its way to the 100,000 mark by the end of the year." Bitcoin's journey to surpass silver has not only set a new high, but it also garnered mainstream attention. Media coverage and positive public sentiment have increased significantly, further fueling demand and attracting new investors. Reached Capital, a popular analyst, shared a cautiously optimistic outlook, suggesting that 96,500 could be a realistic target based on historical performance though a major correction may occur as price fluctuates. The momentum is also carried over to the broader digital asset market, with the total market cap reaching $3 trillion. Nevertheless, Bitcoin maintains its dominance in the market, making up more than 60% of the total digital assets market value. This milestone brings the digital currencies market close to the economic output of countries like France, further demonstrating the growing influence of digital assets on the global stage. The popular Bitcoin Fear and Greed Index has also changed significantly, now resting at 80, showing extreme greed. It might suggest that Bitcoin's price might experience a short-term correction soon. The surge in Bitcoin's value has drawn interest not only from private investors, but also from governments worldwide. For example, El Salvador's national investment in Bitcoin has already yielded a profit of over $119 million, prompting President Nayib Bukele to tweet, "I told you so," in a celebratory nod to Bitcoin's success. In the United States, high-profile figures like Donald Trump and prominent lawmakers are increasingly supporting Bitcoin initiatives. Trump's recent victory has sparked hope among investors that the U.S. will adopt a more Bitcoin-friendly stance, potentially fostering further growth in the sector. In addition, the recent launch of Bitcoin ETFs designed to let investors trade Bitcoin with traditional stock markets has also contributed to Bitcoin's growing appeal. With silver behind it and Saudi Aramco in its sights, many are wondering if Bitcoin could eventually challenge gold's position as the ultimate store of value. Currently, gold has a market capitalization of roughly $17.5 trillion, nearly 10 times that of Bitcoin. To match or exceed gold's market value, Bitcoin's price would need to rise to an estimated $1 million per coin. While some experts believe this is achievable within the next decade, others see it as a more distant goal. Former Twitter CEO Jack Dorsey has voiced his belief that Bitcoin could overtake gold by the end of this decade, and other industry leaders share similar long-term optimism. However, this path to the top won't be without challenges. As Bitcoin's price increases, some analysts caution that a market correction is likely. Considering the current market excitement, traders should be cautious about using too much leverage, as sharp downward corrections often follow quick upward surges. Bitcoin's recent accomplishments underscore the evolving landscape of finance, where digital assets are increasingly accepted alongside traditional assets like gold and silver. While Bitcoin's rise has been meteoric, its journey is far from over. With global financial institutions and governments beginning to explore the potential of blockchain technology and digital currencies, Bitcoin could continue to break records and redefine the investment landscape. For now, Bitcoin supporters are celebrating its price as the 8th most valuable asset in the world. Yeah, so stay humble, stack sats. I can't really pay too much attention to the price. Bitcoin's going to do what it's going to do. And, sure, celebrate, but stay humble, stack sats. Next up is from Bitcoin Magazine. This is an opinion piece from Mark Mason. This was posted on November 14th. Bitcoin, the key to unlocking the dream of homeownership for a generation priced out. This is something I've written a little bit about in my blog as it relates to the Bitcoin price of your home and how, over time it requires less and less Bitcoin to buy a house, even though the price of the house is going up in fiat terms. So let's see what this has to say. Picture this, dear reader. It's 2016, and for the princely sum of $288,400, you could stroll into the American dream, your very own house. Now fast forward to 2024, and that same slice of suburban heaven will set you back a staggering $434,700. Wages haven't quite managed to the same level of gymnastics, leaving many young folks clutching their wallets like they're bracing for the next unexpected subscription charge. But what if I told you there was a way to make home ownership not only possible, but laughably attainable. Enter stage left Bitcoin. Yes, the orange wonder coin that goes up, down, and all around faster than a politician's promises during election season. Let's talk numbers, shall we? In 2016, if you had 664 Bitcoin burning a hole in your pocket, you could swap it for a median US home. By 2020, that figure had plummeted to a much tidier 45 Bitcoin, and now in the grand year of 2024, a mere 4.8 Bitcoin could snag you a place to call your own. At this rate, we're only a few years away from buying a house with the change down in the back of Satoshi's metaphorical sofa. Let's marvel at this for a moment. As house prices in fiat terms continue their relentless climb like an escalator with no off switch, Bitcoin's purchasing power has been heading in the opposite direction. It's not just holding its own against inflation, it's laughing in inflation's face, stealing its lunch money, and then inviting it to watch while it buys a house. For millennials, Gen Z, and the generations to come, the dream of homeownership has often felt like trying to catch smoke with bare hands. Wages are stagnant, the cost of living is skyrocketing, and central banks seem to be in perpetual money printing competition. But Bitcoin offers a way out. It's not just a currency, it's a lifeline, a savings instrument that actually rewards you for your discipline and foresight. Imagine saving up for a down payment in Bitcoin rather than fiat currency. While the dollar in your savings account loses purchasing power faster than an ice cream cone in the sun, your Bitcoin nest egg could be growing, not just in value, but in what it can buy. At the current pace, we're hurtling towards a future where a single Bitcoin might well buy you a house, a car, and possibly even the white picket fence thrown in for good measure. And here's the kicker. The rapid decrease in the number of Bitcoins needed to purchase a house isn't just a fluke. It's a reflection of Bitcoin's deflationary nature and its growing adoption as a global store of value. When priced in Bitcoin, houses are getting cheaper. When priced in dollars, they're getting more expensive. It doesn't take a financial wizard to figure out which one makes more sense to save in. Of course, Bitcoin is not without its volatility, and there will be days when the price moves faster than a caffeinated squirrel. But for those with long-term view, the trend is clear. Bitcoin is the best savings instrument humanity has ever seen. So to all the young families and would-be homeowners out there, take heart. The dream of owning your own home isn't dead, it's just been reimagined. The answer isn't in working harder or saving more in a currency that loses value by the day. The answer is Bitcoin. And one day soon, when you're sitting on the porch of your very own house bought with a single Bitcoin, you'll raise a glass and say, "Cheers, Satoshi, you made this possible." Now, where's that Bitcoin wallet? Gotta love it. And it's true. I've done the math. Okay, next up is another opinion piece. This is also from Bitcoin Magazine. This is from Pete Rizzo, and this was posted on November 14th. See how fast your savings and salary are collapsing against Bitcoin. With the price surging above 90,000, you're likely all too aware that everything that isn't Bitcoin is rapidly diminishing in value. But now you can visualize it on pricedinbitcoin21.com, and there's a little link here in the article to that. I just discovered this website this week, and as a Bitcoin owner, I'll say it makes me feel better about my financial decisions. As you can see from a quick glance here, the US dollar is now down 86% against Bitcoin on a 5-year basis. Ouch. Most of the charts are a sea of red. Here's a look at Bitcoin's performance against precious metals. I'm glad I don't own any. From a quick look, we can see they are rapidly going to zero against the superior asset. So there's a little chart in here that shows the price, price per Satoshi for gold, silver, platinum, palladium, and it's ugly. It's really ugly. At this point in the article, you're either depressed beyond all reason or reasonably happy, so I figured we'd throw in another chart. This one shows how fast the value of wages are dropping against Bitcoin. I still get paid in dollars, preferring to roll over my savings, but I have to say this makes me reconsider the decision. On a 5-year basis, you've lost nearly all of your purchasing power. Wowee, at least you didn't buy livestock. And there's a chart for live cattle, feeder cattle, and lean hogs. Everything's like 90+% down. versus Bitcoin. Anyway, I'll be bookmarking this site and referring back to it. If you don't yet own Bitcoin, it provides all the evidence you need to understand the situation, get off zero, or face the red wave of economic reality. So definitely check that website out. It's pretty cool. Okay, finally, just wanted to highlight this week's featured post on Bitcoin Fortress Substack. Articles entitled 10 Signs We've Reached Peak Fiat Culture. I had a lot of fun with this one. Put some fun pictures in there, so you can please check it out. There's going to be a link in the show notes along with all of the other things that I reviewed. And finally, weekly top boost from Fountain at God's Death with 536 sats. Thank you, sir. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack. It's located at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes, and that's the only social media I am on. And with that, I will talk to you all next week. Bye-bye.